Hey, good afternoon, everybody. It's Mike with smartoptiontrading.com. It is Friday, the 20th of March. This is our weekly recap. It goes out to all my subscribers and everybody on my mail list as well as on YouTube. If you're interested in learning more about me, please come over to smartoptiontrading.com, sign up for live trading works alerts. It's $25 for the first 30 days and $100 thereafter. We have a room. You get trade ideas, option flow every morning, banter, comedy. You never know what you're going to get. Bottom line is we're here, we're making money, we're staying active in this markets in both directions. You never know what's going to come out on any given day as we wait for a market bottom. If you missed out, you sign up, you get to see my webinar on how to spot a market bottom that we shot yesterday on Thursday. So the week that was, guys, the week that was, it was kind of an ugly week. We had the gap up last Friday, sold off hard and gap down on Monday, and then we've chopped around here. And I've drawn this line on the SPY daily chart because it represents an area that has become this big area on the market. And this is 247.50. And you can see you have the close here. You know, you can see two tops here, and you can see how this has just become an area of contention. And when you look at this chart, you see that, you know, there was your move down. Here was your H cell pattern. And then we've just bled down since then. And, you know, it's important to notice that since the 4th of March, we haven't even touched the 8-day. That tells you just how weak we've been. And right now you have a bear flag forming. Now, I said on Wednesday that it felt like the market was trying to put in a short-term bottom after we had that quick panic move during lunch between, what's his name, the hedge fund manager who was on somebody help me out here, on CNBC, and Trump speaking at that time. Bill Ackman. Thank you. You guys in the room are the best, always shouting out stuff for me. But so you see that coming down, kind of the short-term bottom, but it looks like a bear flag. And here we are on the lows. Why are we on the lows? I'm going to ask you one simple question. Who the heck wants to be long this weekend? You look what's going on. You look at the curve that's taking place in the United States in terms of the virus. And, you know, I think everybody has to settle in that this is not going away. We've talked about this ad nauseum. This is not going anywhere. And in the meantime, you just kind of have to grin and bear it. And most important thing you can do is keep yourself and your family safe, and, you know, wait for this to end. And then really that's all that you can do here at this point, is wait for this to end, and we'll know the end. You know, I went over that in my webinar. So if you're interested, sign up. But you'll see that bottom. It'll be very clear. We talk about what to look for in terms of the bottoming, in terms of how this should likely play out. Bottom line is, you know, one thing I'll keep telling you is the Fed is pumping so much money into this market. We're about to get $1 trillion worth of relief to people who are going to be the most affected by this. And I think that's great. And, you know, now we just need to lock this country down and get this over with. So, you know, you look at this and they say, okay, Mike, what else is going on? Well, the VIX. VIX today finally came in. You had this big move down off this 85 area, came all the way down, touched on the 57. Now look at what's going on here in the last hour. It's bounced all the way back up into the 67 range. So the VIX, which gave this big move back, is saying it's not ready to roll over and play dead yet. You know, there's not a lot of good news expected. You know, I think the package to bail the people out is already built in. When you look at charts and you look around, you say, okay, what's going on out there? We haven't seen any flow yet of size that makes me say get long, right? It makes me want to get involved in a name. So, you know, you open this up, let's go to a 1-year chart. And you can see here, come on, TOS is really slow right now. Apple, this big move off the 327 all the way back down here, 242, still holding in better than most of the markets, but slowly capitulating here, not able to get going here. Microsoft has been holding in well, finally rolling back over today, but had at least breached the 8-day yesterday. Zoom's been a rock star, right? Zoom, new all-time high today. It's been a rock star. I'm surprised that names like Cisco and Microsoft aren't going, because they have the same type of technology work as well, but everybody's focused on Zoom. That's where they're playing, right? You can see work off the lows, can't go. Netflix continues to hold in better than markets, but has no real power here, can't get going. And, you know, Roku, which should also be doing good in a market like this because of all their streaming capabilities, they're not doing well. So bottom line, just really, really tough markets here at this point. Nothing is easy right now. The retailers continue to play in and hold in well, like Costco, though selling off today. Walmart put a new all-time high in this week, came all streaming back in. Remember, what's going on in these big retailers is a short-term bump. And what I mean by that is it's really just short term, because this will go back to normal. By the way, March 31st, 225 puts on the SPY coming in 1100 plus here. For me this week, what I do, I scalped a tremendous amount. I kept it tight. If I got stopped out, it was okay. If I took a loss, it was small. Didn't take a lot of losses. By keeping my size down most of the time, I was able to stick with things a little longer. And you can see, just kept trying, so for today, today it was TQQQ, then it was Zoom. Then I took CCL for a ride, and then I tried TQQQ again for a little bit of a win. And then I didn't try Tesla with a lotto. It didn't work. Bottom line is, some things worked, some things didn't. I pounded SQQQ and TQQQ today. And you ask me, why am I this week? Why? Because they're liquid. They're inverse ETFs. They're leveraged. They move fast. And when they're in motion, they're very, very liquid. You can see the volume in it, and they're easy to trade. You can trade 100 lots and make nice money. You can make 200 lots, even 1,000 lots occasionally, right? Depending upon how you feel about the market. And this is the inverse. You can see them all actually trading very, very well here. Bottom line is, right now in this market, you kind of have just to wait for things to come to you. You have to wait for the market to tell you what it wants to do. And the message it delivered hard and fast today was it doesn't know what it wants to do. And that's really what kept me on my heels. I didn't trade a lot of size today. I didn't trade a lot today because the market said all day today it didn't know what it wants to do. Very algo driven, very premium burn driven type market today as we go into the weekend. So my number one message to everybody who hears this: please be safe, take care of yourself and your families, be healthy, find ways to relieve the stress and get outside. Outside's a great place to go. Long walks on places where there's no people around are great things to do. And just try to relax and forget about the markets. This is all going to pass, but it's going to take time. Everybody have a great weekend. Thanks for listening to me rattle, and I'll post charts probably on Sunday. Take care, everybody.